Hi friends, my name is Partha. Welcome to YouTube channel Nifty Trials. In this video, I will be doing a weekly analysis of global financial markets, Nifty and its various sectors using a 3D method, price, volume, delivery. Today's date 25th July. Moving forward, so, first thing is the disclaimer. The content provided in this video is strictly for education and informational purpose only. All viewers are requested to seek independent and expert opinion before acting on anything mentioned in this video, and I take no liability or responsibility for any decisions taken by the viewer solely based on the information provided here. Moving forward, my aim has been to be unique in this because there are so many videos that are created in YouTube channel. So I want to add more value. So I was thinking how I can add it. So I came up with this content of this video where I will be doing the global financial market weekly analysis and seeing Nifty in its context. Apart from that, I will also do Nifty in three dimensions, that is using price, technical analysis, and I will be using volume, VWAP and VMA indicators as well as use OI of various participants and delivery. And seeing this context, seeing Nifty in the context of global financial markets and Nifty's individual sectors positioning. So using all these tools, we will come to a conclusion and how we have to position ourselves for the next day. Now let me first take you to global financial markets, how we are set up. If you see, the first observation has been there has been a channel that is created on S&P 500 since March 23rd, and that channel has been shrinking. Although it has once breached and went to 3250 S&P 500, again came back into the channel and has been more or less in the channel. And in the last 2 days, something noticeable has happened. That is, there are two red candles that are formed. By forming these red candles, this channel has been closed. So channel is created in last 3 months that has narrowed, and finally this channel is closed with two back-to-back red candles. So what we can expect? Say the breach of 3220 to 3260 move that has happened here in these two candles has been negated. So if we are coming back, which means that there is some selling happened at above 3250. So if 3200 breaks, then we can expect the next support at 3136. That is about 2% downside on S&P 500. So which also opens 2 to 3% downside for the global financial markets. So now if we see Nifty based on S&P 500, if we see 3250 not held for more than a day on a closing basis, it is not taken out on the upside for more than a day or two, that is by Monday or so, then we can expect a downside to 3140. That will open a downside up to 10,900 levels on Nifty. I'm not saying that will happen. My point is that if we break, then this is the first thing that we should keep it in mind. Being aware is more important. There is no certainty in the stock market. Now moving forward, let us see how we are positioned. First, simple analysis using price on Nifty chart. Let us see Nifty bank Nifty derivatives. Let us see how we are positioned here. I'll be removing. So we'll see here. If we see on a 15-minute chart, what we observe here is after moving up to 11,184, last 4 days it has been roughly in the range of 11,223 to 11,047, and we have closed near the top end of the range. This was prior to US market close on Friday. So what we can expect on Monday is first thing is a gap down. A gap down to where? Gap down to maybe a level of where we have opened before, that is again 11,135 or so. So what we can expect is once we reach 11,135, if it doesn't sustain and it doesn't reverse immediately, we can expect Nifty to move in sync with the global financial markets. Once 11,047 is taken out, then only a major downside is expected. I'm not suggesting you to buy on the dip here. I'm only saying observe the market. And if 11,137, once it opens there, 11,184 will act as a resistance on Monday. If you want, you can short, but with a strict stop loss of 11,184 on Nifty July contract. This is what the price is indicating. If you see on VWAP, there has been never a day where it has closed below VWAP continuously from past 4 days. The first day, that is here, if you see, it has closed above on 21st July. On 22nd, it went down but closed above. On 23rd, it just went shooted up, closed on the high. On 24th, you see a low forming again closing. So four times it has closed above. So we can expect a close below VWAP, which means weakness to continue on Monday. Now moving forward, let us see how it looks based on volume. As I said, if this is an option chain analysis that is being done, let me share the video. Let me share the screen. Okay, this is the option chain analysis that is done, and the main observations are at 11,200 and 300, there are 26 lakhs and 23 lakhs call writing positions that have happened. A call writer is always bearish on the market, and call writing maximum happened at 11,500. Even though the strike price is less, what we can think is 11,200 and 300 will act as a major resistance. On put writing side, where people are bullish, the maximum put writing happened at 11,000, which has 43 lakhs. So 11,000 to act as a major support, 11,100 to act as a second level minor support. But if these two breaks, then 10,800 is where the major OI is build up is seen on put writing side. So that will act as a major support. So 11,002, that's what I have shared here. So for this week, what I expect is 10,800 to 11,300, considering the OI buildup as well as global cues are negative. Expecting a trending move on Monday or Tuesday if weakness continues in global markets. This is an analysis based on option chain. Now let us move to what various participants, how are they positioned. This is the proprietary analysis that is being done in on Nifty trials. Have not come across such analysis in any other channels. So let me share here what I have observed. This is the data that is taken out from NSE India website. And what I observe is, what I do is basically I take the data, client, DIA, FIA, Pro, all these data that I take, and I apply certain formulae, and I come to a conclusion. Say this is the uh, formula that I have applied, and let us see for 24th July how it looks. If you see the index long versus short ratio for FIIs has come down from 1.35 to 1.04. So they have closed down their longs drastically on Friday. Still, Nifty has risen on Friday evening. So understand that FIIs who have been bullish in this market have closed their net longs. And short put ratio, this is the index short put to short call ratio. This gives how much bullishness is there in the market. If the number is greater than 1, it means they are bullish, but how much, to what extent are they bullish? The number has decreased if you see from 1.42 to 1.35, so bullishness has decreased. This is put long to put call ratio. This has increased only by 2%, whereas index long to index short has decreased by 30%. So similar analysis is done for all the four participants: FII, DII. DII are the mutual funds, clients where HNIs and retail come into picture, and proprietary pros. So what is the summary here? FII sharply reduced. So what this put short position in decrease and net long position decrease indicates is they have cut their longs drastically. Similarly, DIS further decreased their longs from 0.33 to 0.32. Looks like FIs are blinking their eye first and closing their longs. And on client side, which are retail and HNI, they increase their longs in future from 1.06 to 1.17. No noticeable inference can be made on option position, but what happened was FIAs are sellers, DIAs are sellers and clients, which are you and me, opening Zerodha and Upstocks and all the other brokerage accounts and HNIs, they have been bullish. That's a warning to us. So now you understand how is the market position. If you see pros that are proprietary firms, they also increase their net longs from 0.70 to 0.96 and put writing position. However, they decrease the put writing position from 1.61 to 1.32. So they are also net hedged. They are not bullish, they are not bearish. But FIs and DIs are bearish and we clients are being bullish. Now, if you see the cash market delivery positions, FIA bought 409 crores in the market, but sold, DIA sold, continue to sell 1002 crores in cash market. And DIAs have been bearish entire week and they are continuing to be bearish. FIs are reducing their bullishness. That's the inference. Now coming to option chain analysis, which I have shared. So that's the summary that I distilled from the 3D analysis, the price, the volume, and the delivery. Now seeing this market from context of how are its components positioned is also important. So let us see how Bank Nifty, the one of the major index, is positioned. That is in fact closer to the VMA or VWAP. So the weakness is more persisting on Bank Nifty than Nifty. Now moving to Nifty IT. Nifty IT has been more or less has been, I would say, supporting Nifty in its up move. So I would still stay sideways on Nifty IT, and I would say weakness is persisting on Nifty Bank and Nifty Auto as well because Auto is seen closing at the lower end of the range, whereas Nifty is closer near the higher end of the range. So Auto, IT, and banking, this is how they are positioned. Thanks for watching this video, taking time out and watching this video, friends. Thank you. We'll come up with more such videos on a daily basis and weekly basis. Thank you.